Jack, we got quite a few big announcements coming out of the US and also the UK.
Yeah.
Starting with the US, Trump.
Yep, the merry-go-round continues with the Iran saga. So now there's been revelations that peace talks are sort of in their sort of final stages, which is a big flip from the start of the week when Trump was ready to launch attacks once again. So markets have sort of reacted really positively, as you expect. So naturally, oil's come right off. Bond yields have also dropped off as people are sort of expecting the resolution, and that means equities are received a nice boost out of that as risk starts flowing back on and people gain confidence.
And the G7 finance ministers met earlier last week. We mentioned on Tuesday. The UK has come up with a good deal.
Yeah, so they've secured the first trade deal out of those G7 nations with the Gulf states, so that's Saudi Arabia, Qatar, and those nations. Previously, there hasn't been a lot of free trade between these regions, but this is the first sort of deal of significance, expected to put nearly $4 billion into the UK economy, £4 billion, into the UK economy each year. So obviously that's going to be a massive uptick in growth for the UK. Really positive.
And the minutes from the US Fed decision, sentiment seems to have shifted quite dramatically.
Yeah, so the Fed has been very content to sort of hold rates for the last little while and potentially look at dropping them down as Trump's been really pushing for that. Ironically, it was his invasion into Iran which has sort of prevented all that, and basically it's flipped on its head. And the meeting minutes suggest that the Fed's looking at rate rises rather than any cuts in the foreseeable future.
And to Australia today, unemployment rate being released, analysts predicting to remain steady.
Yep, so it's got to remain steady at 4.3%. If the figure comes in below that, expect the Aussie dollar to get a boost, as that means more people are working, more money flows into the economy. Conversely, if the rate comes out higher than that, the Aussie dollar will come off a bit. Unemployment very closely tied to inflation.
And PMI data overseas, just remind us again what the PMI data represents.
The PMI data is the Purchasing Managers Index, basically a survey of industry and their confidence in their economies. PMI moving positively means they're expecting growth within their business and the economy. So that's obviously positive, and obviously conversely the same. The baseline is 50, so it's a scale between 0 to 100, with 50 being the baseline.
Thank you. And some big moves in the markets. Obviously, you mentioned oil. Kind of no surprises there off the back of Trump's announcements. So I think this one's sort of fairly self-explanatory. Yep. And the Aussie dollar. Just talk us through that a bit. I know you mentioned the decision coming out today.
Yeah, so obviously a lot of factors come into FX movements, but this is probably more the market moving into that risk-on sentiment once again, with the peace talks ramping up, and the Aussie is a very risk-on currency. So anytime the market's willing to take on more risk, expect to see the Aussie get a boost.
And the S&P, I guess, conversely with the oil, that's tracking up on the back of those announcements.
Yeah, exactly. Again, risk on is a boost for equities. They'll thrive in that environment. Nvidia also posted their earnings yesterday, which the revenue beat analyst expectations. So obviously Nvidia being one of the largest company in the world, it's given that a nice boost as well.
And some big volatility changes. Gold, past 24 hours, big jump a few hours ago.
Yeah, you can see that kind of tracked the S&P, so it seems to be sort of following the equities recently.
and the UK 100, presumably on the back of that trade deal.
Yeah, you can see sort of the impact that's had, again, with the risk on mindset, but yeah, you can see that trade deal was received really positively.
And the chart of the day, the dollar CAD here. You want to talk us through this one?
Yeah, this is just looking at the US dollar against the Canadian dollar for the past month. You can see it was sort of rising up through that channel and then has sort of stabilised at that $37.30. The reason for this is sort of all the points we sort of usually touch on. The difference in monetary policies, the Canadian interest rate sitting at 2.25%, whereas the US is up at the high threes. So obviously, whichever currency has the high yield will get the favourable treatment with that. The Fed changing their stance to more hawkish, looking to raise rates will only increase that divergence. The USD is also the traditional safe haven. So with the turmoil with the Iran conflict, investors traditionally flow into those safe havens, the USD being the chief among those. And then also we've touched on bond yields lately and the big increase in the US Treasury long-term yields. Again, that boosts the local currency. So all those have contributed to the USD getting a boost this past month.
Thanks, Jack. And the article of the day, so the UAE announcing a new pipeline that, not announcing, but advising the new pipeline to bypass the Strait of Hormuz is well underway at around 50% at the moment. Yeah,
it's no surprise that they're trying to figure out ways to avoid this situation happening again. Obviously, Iran found a way to get a lot of leverage in negotiations with the US, but they're trying to make sure this is a one-time occurrence and they can't pull this lever moving forward. So a lot of the Gulf nations are sort of exploring how to diverge away from the Strait of Hormuz and sort of free up supply through other channels.
So would this become a backup in those cases, or would this become the way going forward?
Yeah, it's not going to be a replacement for it, but expect to see some divergence that would traditionally go through Hormuz to sort of go through these newer channels being created.
Okay. Thank you. Any questions from the audience?
Max.
And why gold moves in the same direction as stocks? They generally have negative correlation.
Yeah.
Why would it move in the same?
Well, yeah, it's. I think it's just the landscape and the turmoil that's been the last few months. Traditionally gold's been the hedge against inflation, so you'd expect this high inflationary environment to really push up gold, but that hasn't been the case. So there's clearly other factors that have come into play against it, and gold's sort of changing the way it behaves a little bit recently.
And do we expect any big moves today after unemployment data from Australia, like in the ASX or Aussie gold?
Only if there's a result. So it's expected to remain steady. If there's a big change in that, a few basis points either side, expect there to be movement, but if it comes out as expected, there won't be any movement.
So if it's higher, then what would happen to the ASX?
So if unemployment rises, that means less people are working, less people are spending money in the economy, the Aussie dollar will fall off because that'll take, theoretically, sting out of inflation.
Cool. Thank you, guys. Cool.